Index? Well, David Coleman is the Chief Data Officer at Experian SA. David, thanks indeed for coming in. I suppose that let's just start to talk about why debt data is so handy when it comes to sort of assessing the country's economic health.
So, Devin, what we like to think of is that this index actually gives you an indication of the health of the country as well as businesses at large. And it's because we measure both debt as well as macroeconomic factors and how that impacts companies to actually turn that debt into cash and then finance further growth in the economy. As such, from a macroeconomic perspective, we monitor growth, both locally as well as in the US. We look at the ability of companies to pass pricing pressures through their margins onto consumers, and we look at inflation rates as well. So what we've picked up is basically in recent times there's been an improvement, and that follows on what we saw towards beginning of last year. We saw recessionary conditions, and there's been an automatic improvement since then, so in Q3 and as well as in Q4.
Now, what are the sectors that stand out? And I would imagine you would have expected, just given the drought situation, is the agricultural sector. Still high debt stress levels there, am I right?
That's correct, yes. So in addition to the prolonged conditions that we've seen from the Western Cape, there's also been renewed drought conditions in the northwest of the country, and we know that that's where the staple from the country comes from. In addition to agriculture, we've also seen some stress growing within the mining sector. And in addition to that, we've also seen that finance and your services sector is also being impacted.
I've got to ask you, is there a relationship in debt levels or stress levels decreasing as investment comes in? Is that a logical trend?
Well, what we've seen actually that there's been a contraction in investment within the country. Yeah. And as such, you're seeing that in the growth rates being suppressed. And I think naturally that then passes into the debt that companies tend to have buckled down in terms of their commitment to invest further in the country. And as such, that has helped them in terms of buffering against some of the more stringent criteria we had towards the beginning of last year.
One thing that this index does flag is the fact that small businesses are also experiencing this sort of debt stress levels. And I suppose when you think about the prompt calls that they've always made for government to pay them in a specified period of time and how crucial that is to their survival, you can understand why they have these levels.
Definitely. What we've seen is that if you compare the debtor days level of SMEs to that of the normal businesses, they take about 10 days longer to collect the money from businesses like government. So they're sitting at about 60 days average to collect money and to turn that back into cash. So there's severe pressure on them, and that has increased in the last 3 quarters.
David Coleman, Chief Data Officer at Experian SA, thanks very much indeed for coming in.
Pleasure.